What are government bonds? When we go to work or to school, we take a bus, our car or our bike. And thanks to a paved road, we reach our destination. When we have a temperature, we call our family doctor to get the prescription for a medicine. But who built the road? And who pays the family doctor or gave the money for research on a rare disease? All of us. That is the state, who is the only one to care about the common good. Government bonds are certificates, once they were real pieces of paper, that represent a debt contracted by the state to get the money to carry out its activities. How does the state get the money? The taxes we pay are used to finance public spending, but usually they're not enough. So the state may turn to those who have some savings to get a loan under the payment of interest, returning the capital at the due date, called the maturity. Usually, when bonds have a maturity higher than 1 year, the state is also committed to pay a half-yearly interest rate, the so-called coupon. In the newspapers, you can find the price of bonds that expire in 3 months, those that expire in 1 year, 10 to 30 years, but even 50 years. Where can we buy government bonds? The state organizes periodic auctions in which banks and institutional investors take part. As in this market, you can only buy big quantities of money. Private individuals may buy bonds through the intermediaries and pay a fee for this service. Or they can go to the secondary market and buy bonds from savers who want to sell them. Is it true that government bonds are not risky? No, it is not true. The state manages its debt with particular attention not to overborrow, because if the market perceives that the level of debt is too high compared to incomes, the interest rate will rise, making debt repayments more difficult. But the debt is not always under control. Even for a state, it can be difficult to repay creditors. So, government bonds can be risky. Only very few bonds are considered risk-free, in particular, short-term bonds issued by Germany and the United States. These bonds have a low yield because they are issued by virtuous countries with a low probability of bankruptcy.